just because it's 3 minutes past, so we've got quite a lot to get through. So should we kick off? And maybe as a small group, we could just go around and just do intros. So and just sort of say name, sort of company that you're from, and maybe what sort of attracted you to join the session today, or sort of any challenges that you're having within finance at the moment that we can perhaps address through this session. So I'll just kick off with Francis.
Thank you very much for that. I am Frances O'Reilly. I'm working in a ready-meals food company in Monaghan in Ireland, DMC Foods. I think my boss, my colleague, Farrell, is meant to be joining us, although I don't see him on the list yet. So maybe he's got tied up. I know there's a few meetings today. So I know this was of interest to him. So he sent the link to me too. So that's why I'm here.
Great. Ben?
Hi, yeah, I'm FC at Tavalis Limited. So we're a tech company that do POS solutions for the hospitality industry, based in Hull. So likewise, I'm expecting Anthony, our CFO, to be on this, but we're effectively at the kind of point that you sort of imagine in terms of trying to generate value and turn the company from being very much looking at the here and now to be a bit more forward looking after having investment just over 18 months or so ago now.
And so, sorry to interrupt, Ben. You said Tavalis, as in the EPOS solution company?
Yep, that's the one.
Okay. Know you guys well.
Great. Thanks, Ben. And Liesl?
Hi. Yep. So I'm Liesl. So I work at a company called Viennatus Bio. So we life science biotech startup company. And I received the invite and it looked interesting. So just to see what others are doing, and yeah, I'm not expecting anyone else on the call.
Great. Thanks. And Karen, if you're there.
Yes, I'm here. I am Karen Ellis. I'm CFO at Visio Travel. So we're a B2B travel company offering tours from Asia into Europe. I joined the company a few months ago, and I'm really just looking at all our systems and how we set ourselves up for the future and to be able to scale.
Great. Thanks, Karen. So absolutely delighted to have Ian and Nat and Jordan with us today to walk through this session. I won't take up too much more time before I hand over to them. But I guess everybody sort of has cameras on. So what I would just say is, obviously, as it's a small group, let's really make it as interactive as we can. Feel free to jump in, ask questions at any point, anything that comes up, and hopefully have a really good discussion. So without further ado, I'll pass over to Nat.
Hey guys, good to meet you all. And if I just share my screen, we can get to the subject matter, and then I'll introduce myself more formally. But yeah, super happy to have you all here today. Glad this piqued your interest. It is going to be an intimate session, I can see, so I strongly encourage all of you to ask questions as we go. If any thing that either I or Ian say piques any particular interest, please do pop the question in the chat. One of the nice things about these kind of more these smaller sessions is there are an opportunity to have more of a discussion about the points that are going to be raised today. The purpose of this webinar is really to focus on from reactive to proactive. I mean, a charmingly cliche title, but really growth comes with many, many different challenges. And what Ian and I will be digging into today is hopefully some of the pain points that will resonate with you guys post private equity backing. I think Karen, at the end there, you said, you've come in, you've just joined the business, you're looking at the different systems for the processes of the business and what needs overhauling now and what perhaps needs overhauling later. And that is what this session is really all about. How you can avoid ending up in a scenario where you're just constantly firefighting and feeling like you're behind, you can't get a live visibility or have trustworthy data, and end up in a place of forward thinking based on high quality live data, simply because you're growing faster than you can hire and you've got lots of reporting pressure. So that's really what this session is about, scaling your finance system for growth. building a live view of cash flow. If I just move these slides forwards, for myself, I am the Agicap speaker. So my name is Nat. I head up the partnerships team here at Agicap. So really, my job involves interacting with private equity funds like BGF, also ERP integrators like Nobly 2, who are one of our partners, along with other financial consultancies who would advise on whether a company might need a cash flow or treasury solution, and then ultimately implement that solution as well. So I think I'll just let Ian introduce himself and then I'll carry on.
Thanks, Nat. Morning, everybody. Ian Irwin. As you can see, I was the founder of Nobly 2. You've potentially never heard of us, so just as a bit of an intro to what we as a company do, we for the last 25 years, we've been helping companies adopt ERP systems. So we are an ERP systems integrator. And we ourselves have fairly recently started off on a similar journey to yourselves. Two years ago, we took private equity investments. And so we, whilst we'd been working with many private equity backed businesses in the past in terms of helping them, it's been a real eye opener into the unique challenges that is brought through investment and through that journey with investors. So no doubt we'll get into that a little bit more as we go through. But pleasure to meet you all.
Thank you, Ian. Pleasure to see you again. Quick intro to Agicap, and then Ian will give a little bit more detail on Nobly 2. Agicap is an all-in-one cash management solution. So we're originally a French company founded back in 2016, now active in 52 countries across the world, including offices in 7 different countries, with our most recent office coming in Austin, Texas. I myself am based in London, and we have we're doing about 60 million turnover now, with 150 partners, of which Nobly 2 is one. In terms of what we do, we are the market leader for cash flow management in the mid-market segment. So that means businesses right at the beginning of their growth journey with business growth fund. So really small clients would be 1 to 5 million turnover, right up to companies working with the bigger mid-market private equity funds doing hundreds of millions. And we are, as it says, the leader based on both customer satisfaction and also market penetration. So our ability to integrate with different banks and also different ERP systems. Overall, we've got about 8,000 customers across all different sectors. Cash flow is a relevant topic for all industries, of course. You can see here some of the private equity funds, including BGF, backing our clients and some of the ERP systems that we would integrate to classically. Ian, back to you.
Thanks, Sam.
Next one. Yeah.
Perfect. Thank you. So just to kind of frame us a little bit more, as I mentioned, we've been working now for 25 years, founded back tail end of 99, and exclusively during that period have been really super laser focused on how we help other companies with their tech stack to enable growth within their own organizations. We do that using obviously ERP, and our principal ERP is NetSuite, which hopefully is a product that you may have heard of previously, an Oracle-owned product. For that product of NetSuite, we are the largest and most experienced provider in EMEA, and we operate throughout EMEA. So whilst we have operations in the UK and Spain and a team of folks, a small team of folks over in Manila, our customer base is spread throughout Europe and more broadly into the rest of the world, with customers spreading across 56 different geographies. During that tenure, we have implemented over 1,000 projects to help companies, with the sorts of topics we are discussing today. Next slide, please, Nat. To give you an idea, the entry point into ERP is a lot lower than traditionally it perhaps once was. We have, whilst we as a company have a very good spread of customers from everything from a very small bee farm, believe it or not, all the way up to large multinational organizations that are multi-billion pound turnover organizations. Some of the logos you can see, some of the brands you may be familiar with, hopefully give you an idea of the sort of breadth and scale of those organizations, but across a multitude of industries also. So a lot around renewables, a lot around fintech and software, and a lot around wholesale and distribution. A real testament to the scalability that comes with modern ERP and its ability to service the smallest through to the very largest organizations from a single application, which is super important and part of what we'll no doubt talk about. Hopefully that gives you a reasonable amount of information about us as a company and the sort of basis upon which we will be talking about these topics today.
Nice, thank you, Ian. And here, I'll let you continue.
Yeah, so I guess one of the, and speaking from this, from two camps, so speaking from this as somebody who's helped so many other companies and speaking about this from a individual who's been on the inside of that journey, on the inside of a very small business, taking its first step into the private equity world and receiving investments and all that comes around that. The number one recurring theme with every company with which we interface is inadequate data, and it to the point where it becomes somewhat of a sort of a chuckling point, usually in first meetings, where people often talk about how bad they perceive their data to be. But this data is everything. Data is principally the key thing that's going to differentiate your business from your competitors in terms of what data you have, the quality of it, and what therefore you can do with it to get the answers you need in order to make those strategic choices for the business. And so we're very focused as an organization in bringing people back to a basic ground, in looking at assisting them to get the core of their data requirements right, and even back to things as possibly conceivably simple as a simple chart of accounts and segmentation. What are the key attributes and metrics that are going to be able to give the business the answer it needs? It would be interesting to know maybe some sort of data challenges you have, but my own personal observations are whatever data structure you think you have in place is probably not going to be sufficient to answer the questions that all stakeholders have in a business. And you can pretty much guarantee that whilst ever things are looking good, those questions might be limited. But as soon as things start going off budget, lots more questions will be inbound, which can then involve huge amounts of manual labor to try and backfill and sort of manufacture that data. So we very much consider the inadequacies of data maybe through quality or maybe through detail. Detail is important. We can summary a detail, but we cannot do the inverse. To be able to provide the business with the answers to the questions that all stakeholders will seek. Nat, I'm going to hand over to you to talk about some other pillars of challenges that probably sit better in the cash camp.
Thanks, Ian. Yeah, I think I would probably second that inadequate data is probably the primary challenge we come across as well. Agicap works a lot with fast-growing businesses for the reason that it makes cash more important. And these are the two things I'll speak to you now. But, you know, businesses that, I've come off a call this morning with a similar business growing at 40% a year, they've got new revenue streams and new geographies they're working in and new products they're offering. And all of these bring new costs at the same time. So it's great that they're able to sell their product in new markets, and it's great that they're able to make money in different ways. But all of this brings additional pressures, and this is an experience that's been going on in business since time immemorial. And it also means, as everyone here in this room, you often take out external financing to support these initiatives. And the risk is, as you can probably tell, that actually you end up in a situation where perhaps your payroll is growing faster than your money can come in. And so you have this inefficient working capital cycle. And similarly, when it comes to actually scaling the business to keep growing that top line, to keep growing the revenue, you have that growth gap that develops as a result of that. Similarly, more employees can make broader expenses jump. And then growing a business, so opening a new office or starting new projects that have big upfront outlays, can mean that huge cash outlays have to get made before you can even think about collecting that money. At the same time, most private equity-backed companies end up having a much larger reporting requirement than they had before they were private equity-backed. And investors' confidence is often based on high-quality reporting. So it's kind of an extension, I think, of pillar one here, Ian, where high-quality data might really be seen as the bedrock of being able to do so much. If you just think about that practically, you know, can I see what's going on in my Manila business? Can I see what's going on in my Spain business in Ian's example? And can I understand that intricately? If you don't, you're still going to have to pay these costs, and you're still going to have to wait for that money. So it's better to know where it's coming in. But if you don't, then you run the risk of running into working capital challenges. And if your working capital is not managed efficiently, your business will suffer from that kind of growth gap and prove not scalable in the end, or you'll have to take out more and more external financing and just increase your costs and therefore decrease your profitability. So this was a question that Ian and I wanted to pose to the group of people in this room, having outlined some of the problems that we see in both of what we do, speaking to private equity-backed businesses, fast-growing businesses, in the conversations that we have. These are kind of the three pillars that we talked about in preparation for this webinar. Inadequate data being number one, the working capital challenges that arise with new revenue streams, new markets, etc., leading to potentially an unscalable business. What do you guys in this room see as the largest inefficiencies holding you guys back? Keen to hear from everyone. If everyone could just pop something in the chat. Is it the data? Is it something else? Is it the reporting? Is it lack of people? Keen to hear all ideas. Pop stuff in the chat. We'd love to hear from you. Francis, you're looking pensive.
That's like an open-ended question, that really.
And so
like,
hopefully it's struggling to think of an inefficiency rather than which one to choose.
Yeah, it's more like which one to choose. And like there's a few that popped to my head at the start, but like I'm kind of thinking from my own point of view, and rather than, I suppose, from a business point of view, and I need to kind of switch that a little bit. So yeah, it's a good question.
Share them both. Share them both, Francis.
Yeah, but like from our point of view, we have we're ready-made meals. Fit Foods is our main brand, and we have we're just after implementing a new version of SAP here. We worked in SAP previously, and we took in the newest version. But instead of doing just an upgrade of our system, we did a completely data cleanse, and we uploaded all our data, our clean data, into the new system. So if we had this conversation maybe a year ago, so we're literally only after, like, we're paddling now, but we're by no means winning. So the data now sitting back going, yeah, what kind of data have we in the system? Because at the end, the last 2 months have just been production, getting the product out the door. But like, if a product is categorized as like a frozen product as opposed to a chilled product, that still gets the product out the door, but it doesn't help the reporting side of it. So now we're sitting back going, what sort of data have we here? And now we're thinking we need a platform, like a reporting platform, like a Power BI or a Click or something like that. So I'm hoping this conversation will help us try and decide on those kind of things too. But data is a big thing. And before this, there wouldn't have been a lot of focus on the data going into the system. It would have been just get it in and, you know, get production out the door, get the supplier paid, get the money in from the customer, and that's all that really mattered. Whereas now we're like business to business. And now it's more of analysis of what is the consumer actually buying and how can we grow that, what products work, what products are not working.
Brilliant.
Interesting.
That's really useful. Thanks, Francis. And we may or may not help with some of those points, particularly. So we're not necessarily focused on BI per se in this session.
Yeah.
But so when really a lot of the key themes, you know, the key, when we think about how we approach the tech stack, and to kind of come back to my comments around thinking about data structures as rudimentary as the chart of accounts and associated segmentation, that obviously then opens up into things like product master proliferating through into the transactions, such that then whether it's in the ERP or flushing out into your DW, your data warehouse, and any BI analytics you're doing on top of that, in order to get the output where you want it to be, you've really got to start at the very beginning. How do you get that dimensionality right that answers the operational and financial questions that are going to get asked of the business, so that you've got sufficient data in the right structure in the BI? Now, there are strategies you can take to put that data through a level of transformation to make it fit for purpose if it isn't already. But that element of it brings potential huge amounts of complexity and difficulty in maintenance of the data, which is why when we really are focused on organizations at the beginning of that growth journey where they may not have yet made that foray into what is the ERP that works for us and so on and so forth. We've really got a golden opportunity to think about that architecture super carefully and how we then intrinsically build a structure that is as future-proof as it can be, but give us a product at the end that is just overflowing with rich data. But we'll try and reflect on those comments as we go through and maybe try our best to bring that to life a little bit.
Thank you.
Okay, so we've got kind of common theme there from Francis and Karen around data challenges, which we might predict. Ben, what about you guys? 18 months in, what would you say?
Probably similar, to be fair. I think certainly up until a few months ago, data accessibility was our biggest problem. So historically, we've always had systems maintained separately, so we're all running separate silos. So we've recently gone through an exercise to implement Snowflake and tie data together. It's now kind of at the point of using that data to inform decisions that we're still obviously kind of early stages of, but it's establishing those processes and basically getting people on board with that same journey that previously would have looked at their one area as opposed to viewing the business as a whole, that we can now do. Particularly when it comes to kind of aligning both your sales and your operational arms of the business, which I think that's kind of the driving force for us at the moment, really.
Interesting. And Ben, Francis mentioned that they've implemented SAP. How about yourself? So Snowflake, where are you furnishing the data from?
So we currently use Xero as our financing finance system. However, we are in the process of transitioning that over to implicit. So we're hoping to have that live within the next few months, basically.
Yeah.
Added to that, we've obviously got Salesforce and a few other systems as well. So, as I say, everything previously has very much been in different realms. So it's the first time I've kind of put two and two together to see what things actually read across as.
Yeah. Okay.
Ian, I'm going to keep us moving in the interest of time, but for everyone else, yeah, don't be afraid to drop in what your biggest challenge is. Guess makes sense, the data, you know, but keen to hear from everyone. Ian, I think it is now back over to you to talk about building those data foundations to scale.
Yeah, thanks, Nat. Okay, so I think I've already talked to half of this already. So, much as you're identifying, I mean, the data is a super important bedrock. But if we broaden that out a little bit, as you are on a rapid growth trajectory, data is going to provide us the understanding of the performance of the business, and maybe answer questions around strategically what we may wish to do next. But of course, within the solutions that we're sort of thinking as part of that tech stack, there are other utilities as well. So, of course, as you are growing, you're adding heads, you're forming new layers of management potentially, and having a bedrock tech stack that enables you to provide robust processes and, importantly, controls that are the entry gates into that data that's being collated goes without saying. It's super important. It sounds like you're probably all at that kind of point where maybe you've made some good decisions around elements of the tech stack and how to think about that going forward. So, we approve of things like Snowflake. We less approve of things like SAP, if I'm perfectly honest, Francis. But anyway, that's another story. But competing application, of course. But getting these things in place are really going to allow you to repurpose time. We generally see at the beginning of companies' sort of first scale growth journey, where a lot of systems are manual, a lot of systems are email based, spreadsheet based. There's a lot of lack of cohesion in those systems. And so really, I guess the key point we're trying to make here is for a continuity of data. So that data that I think we've all agreed is difficult to be well groomed, but I think we all agree is super important to the business. To preserve the quality of that, ideally, what we're looking for is the simplest tech stack that can support the needs of the business across all disciplines of the business. And of course, no surprises, as we've got ERP sort of integrators here as opposed to anything else. The ERP forms the bedrock of that. The ERP should extend and reach into all areas of the business, giving you that ability to allow the business to operate within those bounds and controls that you set. Less Wild West than a spreadsheet, less Wild West than establishing processes around email communications or other such little islands of data, to then guarantee the quality of what's coming out of that to allow the business to make decisions, to guarantee the quality of what's coming out of the back of that to enable you to do your cash flow forecasting, and enable the data that flows out of the back of that to be a solid bedrock upon which you then start thinking about your forecasting and budgeting operations within the business as well. So it really the ERP should really form the bedrock of that tech stack within the organization. We would typically encourage companies that are on a rapid growth trajectory to start thinking about ERP and putting ERP in place a lot earlier than perhaps another business may. So if you think about a sort of a founder operated business that's not got a 3 to 10 year or whatever it might be investment cycle that they're planning for, they don't necessarily, they can get away, if you like, with not having quite the same level of structure. But we typically encourage, from the point of investment, the point of that growth, to get an ERP in place as almost day number one activities, so that we are preparing ourselves for the scaling of people, the scaling of our processes, the scaling of our operations, and of course, the ability to process rapidly, close our books rapidly, forecast and plan rapidly, and have data that we can depend upon to answer those questions that the SLT and the investor are asking of the organization.
Do you want me to share that next slide, Ian?
Yes, sir. And so just to maybe bring that to life a little bit, that of course, all of these things we're talking about hopefully makes sense, getting that bedrock in. But there are actually tangible, quantifiable benefits outside of that. And I appreciate that, Francis, you've already been on this journey by the sounds of it, if you've got SAP in place. But when we think about traditionally where in a company's growth would they leave a financial package, things such as Zero, as Ben mentioned, go into an ERP solution, which is extending more broadly in terms of capabilities. Because of the rapidity of growth of PE-backed businesses, there is a significant benefit in getting that solution in place as early as is possible. It stands to reason that as you are growing the organization with the fewest amount of resources as you can possibly get away with to do that, the further through that journey you get, the business is becoming more complicated. There are more people, there are more processes, there are more considerations to take into account. And implementation much earlier, therefore, is much simpler because there are fewer stakeholders. It's a quicker time to live. Modern ERP. Why did companies historically not implement ERP until they were at that upper mid-market enterprise scale? Well, cost was one, but time was the other. And intrinsically interlinked to both of those was complexity of pivoting implementations. This kind of notion is something that's been quashed with modern ERP, whereby making changes to an implementation of the ERP to accommodate new products, new services, new entities being acquired through M&A, whatever that kind of growth looks like, modern ERP is capable of very quickly being the implementation pivoted to accommodate that growth without those massive overheads of time and cost that one might have traditionally associated, thereby bringing that implementation sooner to take benefit of implementing in a simpler organization can yield genuine benefits in terms of cost saving and therefore taking the benefits of what the tech stack brings sooner. And as we talk about quantifiable benefits, an ERP should make you more efficient. The reduced dependency on operational financial based spreadsheets, systemizing those, making that scalable across a much wider workforce, taking that once was fine, a great spreadsheet, but it was one person driving it, one person feeding the data in, one person taking the results out, and making that scale, making that knowledge broader across the organization is a key enabler of getting an ERP in place, effectively driving those solutions. And as we've said already, as then you go through that growth, the ERP should intrinsically continue to support you, irrespective of whether you are being additive with services, additive with products, whether you start thinking about going into a subscription model whereby you historically have been a product or services organization. The ERP should simply be able to take care of all of that for you. And of course, we all have that new favorite acronym of AI, that the AI that is being baked into the ERPs are bringing genuine utility. We are genuinely seeing organizational growth patterns whereby the organization, its revenue, its EBITDA is growing, but with a much shallower headcount growth pattern owing to the automation, now leveraging AI that we can bring to really enable and support the rapidity of the company's growth. I've said a lot of things. Please feel free as I'm going through, if you have any particular questions, just to shout up. No questions. Awesome. Is that because it made sense or because it's not relevant? Because it's just as important either way to know.
Liesl, you've got to stop chuckling and start chatting.
Are you laughing at me, Liesl? Most people normally do. It's fine. Okay. And if we punt on to the next one, please, now. And of course, we think about some other benefits as well. No doubt, as you are growing as organizations, PE backing, you're probably having to go through financial operations that maybe you didn't previously, financial audits. Everybody loves a good financial audit. The getting through a financial audit with disparate, largely spreadsheet-based systems, I hope nobody's had to go through that, but broadly is a complete nightmare. The ability to demonstrate leading practice within financial and operational disciplines of a business for the purposes of financial and system audit process goes without saying. I hope everybody is appreciative of the values that brings. But what I would say is, when we think about the growth trajectories of private equity-backed businesses, and of course the investment cycles that those organizations go through, much like with anything, when you are looking to take something from point A to point Z, we're always looking at what those intermediary steps are. How do we get from here to here through evolution? And what I would always encourage organizations to do is think about, okay, so we are at an early part of our growth right now. Our ambition is to get to here. What does it look like when we're here? Now, as an organization, we've had the good fortune to help businesses, as I've mentioned already, of all types of scale. And we actually started at the higher end. So we actually started helping companies that were several hundred million of revenue, double-digit million of EBITDA, who are being invested into by some of the globe's largest private investors. And there is a recurring theme across those organizations and their expectations on their portfolio companies in terms of what their organizations look like from a tech stack point of view. And I think amongst a few of us, we've kind of mentioned some elements of that. And so typically we've observed is, as these funds are investing in these organizations, the very first thing they're doing, they're spending the first 12 to 18 months of their investment cycle really trying to get the business's tech stack ready for what comes next, for that real scaling of growth. What that's put us in a fortunate position to be able to do is, for the companies that have not yet got there, is to help them think about that sooner. So if we're mindful of what does our organization look like when we've gone through a number of investments to get to here, what can we do to take out that first 12 to 18 months? Can we put that tech stack in during our first investment cycle instead of our third or fourth investment cycle? Can we make ourselves look even more valuable to those end destination investors right now, and really take benefit that they see, that they believe that tech stack brings us throughout our journey? And so as an organization, that's what we're super laser focused on, how we enable organizations to get themselves ready throughout their entire investment cycles, whatever that's going to look like, to make sure their operation, their business can grow and scale at every step with the least disruption and distraction from what actually drives value in their business. Thereby the tech stack is a inherent lever which is generating value within that organization. I hope that makes sense. Any questions before we move on? No? Okay. Go ahead, Nate.
Back to me.
Yes.
Definitely resonates for me. I feel like I have a lot of conversations with companies that have just taken private equity backing, and that is usually the strategy to sort out the tech stack in the first 12 months, and definitely resonates with what we've seen on the call today regarding the lack of data being structured being a problem. If step one is sorting out the tech stack, so building those foundations to build a business that's both more operationally efficient and then also more attractive to investors in those later funding rounds. The other aspect is also increasing your valuation through efficient cash performance, which I think we had this initial slide with this bottom quotation. Cash performance has always been important in PE businesses, but the current economic environment is making it even more vital. The cost of credit is high, and the market is difficult for all businesses from a sales perspective. So how you manage your cash is even more important than ever. Just to bring light to that, and I think nothing new for most of the people on this call, having been through the investment process with a private equity fund, and also general principles of good financial management. One of the privileges, I guess, of my job is the range of people that I get to speak to. And I always find this comparison really funny, is that you have almost every CFO will tell you that how important cash flow is. That, you know, good CFOs run their business by really understanding the flows of their business on a transaction by transaction level. And every person in a finance team also knows that how much their investors attach importance to their cash flow, simply based on the frequency of the reporting with which they ask for it. Often one of the big changes is moving to that weekly reporting cycle post PE investment. And here I've just highlighted the kind of what that really means in practice. I think a lot of the time increased emphasis on cash flow can just be, okay, we need to really be laser hot on the cash flow forecast. But when investors look at businesses, they really look at the flows, you know, understanding what's going in and out of the bank account on a receipts and payments basis, who gets paid what and when. And then we have the kind of reality perspective, as I call it. And this is where I think a lot of businesses start at the beginning of that private equity journey is, you know, companies often don't know what they're going to be spending next week. And if we take Frances's example from the beginning of the call, you know, where she's talking, we're just shipping the product, we're just inputting the data, we don't really know what the data is. The same always applies for getting paid as well. You know, I speak to so many companies where they don't know which customers are going to pay them when, what the patterns are. They're not tracking that data in an efficient way. So it's kind of a strange thing where you have, by virtue of your success, more an increased complexity to your cash flow. So we talked a bit at the beginning about those new revenue streams. You might go international, you might have new entities. Indeed, you might have some debt in supporting your equity investment. And then you have the private equity backing, which attaches great importance to the cash flow cycle. So you might switch from monthly to weekly. As I mentioned, you might have to feed certain reports back to your bank and different kind of report back to the private equity fund. And then you might need to really understand your cash flow in that much more detail because of all the investment decisions you're going to be taking for the business. So you have this kind of increased complexity to managing cash flow on the one hand, and then an increased importance to getting on top of it on the other hand. So it's harder to do it, but it's more important to do it, aka it's more work. So as part of my preparation for this exercise, I looked at some of the private equity backed companies in our CRM and what life looked like for them before they started using Agicap. And the patterns were quite clear, that a lot of them were spending a lot of time looking at cash flow. And here you can see we're looking at across quite a big range of private equity backed businesses in the mid-market segment, running from 20 million to 80 million. But I think this would apply equally for businesses doing 10 million turnover. It really depends on the individual pressures of that business. It's across a range of industries. And you can see here that the time cost of cash flow really ramped up post private equity investment. And normally it's because of the review frequency had switched to weekly. Where they were looking at it daily, it's not written here, but I can add that it's usually because they couldn't get any kind of reliability. So you see in this middle column, none of them were able to get an accurate cash flow forecast beyond 1 month. And most of them, it was max 2 weeks. And in spite of this huge effort that they were putting in terms of hours, they couldn't get visibility beyond this method. Commonality was that they all used the same tool to manage the cash flow. And Excel is obviously a great tool in terms of flexibility. Ian's mentioned how it gets used in other processes within a business when they come to look at or talk to potential new businesses. It's the most commonly used tool, obviously, because it's super, super flexible. It's very accessible by multiple people within the business. And you are in complete control of what you do. You can structure the spreadsheet as you want, but it's not scalable in the way when it comes to building a forecast that can automate reports, send those back on a weekly basis, and go across multiple entities, produce different types of report, because it requires too much manual maintenance. And the end output, as you see for these guys, is they actually can't get beyond what they need their cash flow forecast to do, which is be used as a strategic planning tool, planning those future investments that are going to enable the growth of the business. So yeah, what I didn't mention here is also the range of different ERP systems these companies were on. I mean, Agicap works with companies doing BC, NetSuite, Xero, Implicit, all of these different systems. And it's one of the reasons that this tool, Excel, predominates, is because that remains a kind of a gap in the ERP system. So here I've kind of written that story, you know, businesses that grow always end up reverting to Excel. It does provide that flexibility, but eventually that manual cost isn't sustainable. So when you think, Karen, as you said, you're assessing the systems, you know, what needs fixing now, that's one of the areas where it will eventually achieve an unsustainable level, whether that be now or later. And then I think the other factor is cash flow gets harder as you get more successful and as you grow your business. It's something that's true across all industries. If you add more entities, if you add more banks, if you take out different loans, you basically have more streams of money moving around that need to be monitored and centralized and consolidated into both a forward view and a current view. And that's true across all of these businesses. And I did have a previous slide, which I have somehow neglected to add to this, showing the setup of these different businesses. And all of them were adding new entities or adding new revenue streams. They had debt, all of these different changes to their business as a result of the private equity backing, which was leading them to struggle with managing the cash flow and their Excel system to break. And I think the other thing that was interesting reading these notes was how often the process or the way that cash flow was approached by these businesses was very, very similar. And you had this separation between visibility and activity. I think also in your message up front, Karen, you said lack of data for reporting purposes. And it's very common amongst all businesses to separate reporting from activity, when actually in a sales team, for example, which is obviously my background, as you can probably read, I hope, is that that would never happen. You know, it would never be possible that someone who sources a deal couldn't see the activity of the person who was trying to close the deal. Those two processes of visibility, so understanding what's going on, and also how we take action based on what we see is going on, are always synced in a CRM system. But in a finance system, this isn't always the case. You know, you have one person who controls the cash flow forecast, and then you might have another person who's going out to those customers. And that is a misalignment. It's a separation of two processes that fundamentally impact each other. And I think, and I'd be interested to hear what people think about this, but it's because of this reporting pressure, this reporting only mindset develops. And cash flow forecasting and cash positioning, you know, that won't change, that you need to be able to report effectively in your data, because as someone said at the beginning of this call, to make effective decisions, you need trustworthy data, you need good reports. So reporting has a value, but too often, I think, in the conversations that I have, you know, what ends up happening is people prepare this weekly cash flow forecast. They can't consolidate all the data on time. So they end up just tracking actuals rather than actually building something that's super reliable and useful for them to make decisions off. So I think the lesson of the wasted hours, we might say, on this slide is that when reporting ramps up, you need to avoid such a trap and focus on growth by building something that's much more automated and much more sustainable. And I think, as Ian's slide pointed out nicely with those 2 lines, making that investment earlier will enable you not only scale the process with the people that come later, so you have a tool that works, but also do so at lower cost and avoid just building reports of reports. You know, this is always something that makes me really, really sad when someone tells me that the way they pay their suppliers is in a spreadsheet, and they adjust the payment terms or split out the payments all in a spreadsheet, when this is something that can so easily be automated at the click of a button in a live tool. So those are the risks, I think. And for those of you that don't know us, I think there's many ways you can solve these problems in a mix of different systems. Agicap has created its platform to solve this kind of reality that people spend too much time on managing cash, and that the processes are not synced at all between visibility and activity. And so our value proposition is essentially this idea of, actually, you can have a one-stop shop for cash, where your visibility, which is the top half of this platform, so both understanding, okay, how much money do I have in all my bank accounts today in the top left, versus how much money am I going to have in 3 months? How much money am I going to have in 1 year, aligned to our business plan? So I have that live forward view in the top right. Those 2 visibility points can be synced to when you pay your suppliers, how you manage those supply processes, and when your customers pay you, and making sure that the customer data that you have informs your forecast and you take action appropriately. And I think I can stop speaking now, as we have 5 minutes left. I know Ian and I would love to hear any thoughts, any questions that have come up based on what either of us have said. It's good to see you're all still here. Any questions? Liesl, you're pondering, but you're going to stay on mute. Okay. I like the honesty there. Any questions from anyone else? I think I managed to almost leave the meeting now.
No, that was very good. Thank you. It's interesting on the whole cash flow and forecasting piece. Like, we're in an industry where forecasting can't go further than a week usually. Any sort of term time changes during the year changes us up. You know, even if you get like a good weather spell in April or May and people take out the barbecues, that reduces their sales. And that could come, you know, Irish weather is something similar to the English weather, you know, it could come completely unexpected. You know, and that's the type of thing that happened, that we forecast for July and August, not April, May time. So it just changes all the time, and it is difficult to bring that into forecasting and cash flow. And like, you can't even go by previous years. Like, Christmas now will mess us up an awful lot, and you know, every year we go back on years and we tend to still get it. You know, we still haven't perfected a forecast. So yeah, it's interesting.
We've seen it a lot. Or what I would recommend is you have 3 forecasts in one. Then you sync them all, and then you have the data that's actually in your system. The data better be in good shape. Hopefully SAP is sorting that out for you. If they're not, you know where to go, as Ian has said. And then you can have your bank data. And then with the 3 types of data, and you have the forecast, you have forecast 1, which is maybe based off last year's, forecast 2, which is like what we think, forecast 3, which is, sorry, you can actually view them all side by side.
Yeah, cool. Okay, thank you.
Any more for any more? Just 2 minutes left, guys. Speak now or forever hold your
Yeah,
peace.
please.
If anyone has any follow-up thoughts that come to them after the session or would like to chat to Nat or Ian, I'm sure we can make the introduction. So if anything does come up, please just drop me a note. I think you've all got my details, or either through Scale or my email. Yeah. So I think if there are no further questions, I guess just last to say thank you to both Nat and Ian. That was a really interesting session. We will be posting the recording on Scale in the next day or so, along with the slides. So if you want to share with any of your teams or anyone was unable to make it, then please do. And always, if you have any questions, then just let us know.
Thank you.
Great.
Brilliant.
Thanks,
Thanks,
everyone.
Thank you very
Thank
much.
you, everybody.
Thank you.
Thanks, guys.
Thanks.
Bye. Bye.